for joining in and giving us the lowdown on Bandhan Bank. But let's now invite the first corporate on our show, Trading Hour, CCL Products. That reported a largely inline set of numbers in the second quarter. The stock holding up mildly in the green as well. There was a growth year on year, but sequentially, there was some sort of pressure. So to discuss the quarter gone by, the status of the capacity ramp up and more, we are joined by the company's Managing Director, Chala Sreesanth. Chala, thank you for joining in. Always a pleasure speaking with you. The first couple of questions. In the quarter that went by, what was the volume growth that you posted? And at the same time, what was the EBITDA per kg?
The volume growth was approximately around 22%. The EBITDA per kg is more or less the same as it was earlier. There was a slight reduction in India because we have outsourced a lot of our production because of capacity constraints.
What was that number on an absolute basis? Can you give us a sense?
About 108 rupees approximately.
Okay, good morning, Chala, and thanks for joining us. This is Pavitra. On your revenue, last time we spoke to you, you said that you can do around 20 to 25%. Looking at the current run rate, it looks like you'll be able to do a lot more. Would you be revising your guidance, or do you still think that for the full year we should expect around 20 to 25?
So actually the guidance that we had given is that the top line growth, the revenue growth will be closer to 50%. But that is actually because of the raw material prices. It's really not because of volume increase. The volume guidance that we had given is 20 to 25%. So the guidance remains the same. Our top line guidance is also closer to 50%, and that guidance also remains the same.
Right. And what is your, utilization of the small packs? Because that is a higher margin product for you, right? Where does that go from now to, say, the next couple of years?
So as of now, we are at around 60% utilization. We are looking at almost 80 to 90% utilization by next year. And we'll be adding a couple of equipments to enhance the capacity as well. The factory that we have built for small packs, we have actually built the infrastructure to more than double the capacity by just adding equipment with minimum investment. So that once we reach this 85-90% utilization, we'll be adding the capacities as well.
So what does that do to your EBITDA per kg? I mean, from 108, where does that go? Because that is margin accretive.
Yes, so we are still guiding it's going to remain at more or less 108 because our volumes are actually going to increase more in spray-dried product. So in our product mix, freeze-dried and small packs will give you definitely better margins. But the expansion that we are doing is more in spray-dried. So even though if we increase our margins in these other two products, by sheer volume growth, if we maintain the same level itself, is a good sign for us.
Okay, got that. And speaking of margins, can you tell us what we can expect? Because I do know that sequentially there has been an improvement, but if I look at it on a year-over-year basis, there is still quite a significant, contraction on that front. So what do you expect margins to look like for all of this year?
So we've actually given a guidance of an EBITDA growth of approximately in the range of 20%. And as of now, we are completely on track for that. In fact, if you look at the first half year, we're at about 20.68%. So, and bottom line also is at around 18.6% is our growth in the first half. And in the second half, it will actually be slightly better than this.
Right. Second half margins will be better. Chala, we ask this to you every quarter, and that's because of the massive capex plan that you're on. What does your capacity currently stand at? What does it be at the end of this year? Where do your capacity utilizations stand at?
So right now, we are actually at 100% utilization, and our capacity is around 38,500 tons. We are outsourcing a lot of our production because we are trying to build the market before our new capacities come online. One of the reasons for the EBITDA percentage reduction is also because of that. Once the capacities come online, that reduction also will go away. And the new capacity that's coming online, an additional 16,000 tons, will come online by the end of this calendar year. And hopefully in Q4, we'll end up doing the trials and we'll start seeing additional volumes coming in from Q4 itself.
Could you tell us what kind of volume you would expect with all of these new capacities on stream?
Initially, we are looking at for next financial year with the new capacity coming online, we are looking at a minimum of 50 to 60% utilization of the new capacity. So on an overall blended basis, we are looking at maybe a 75% utilization of our overall capacity for the next year.
That's roughly 70 to 75,000 tons in terms of volumes.
75,000 tons will come by the end of next financial year.
Right. Also on the India business, Continental Coffee, I mean, what have you done in the second quarter? What's your target for the entire year and going forward?
So the branded business, so there are two parts to the Continental business. We have a branded business as well as a private label business. So the branded business is what we are targeting approximately around 180 crores for this year, and we are on track for that.
Okay. Also on the global exposure, we know that I think the last time we spoke, you said you have around 20% exposure to Europe. Can you tell us, have you seen any kind of impact there because of the inflationary pressures? Is there any hit to that business?
Actually, yes, we have seen an impact because what's happening in Europe today is there's a huge energy crisis over there. So all the manufacturers, the European manufacturers are not able to produce over there. And they're ending up depending on imports a lot more. So we've started seeing a lot of order confirmations coming in for all of next year as well. So volumes in Europe will actually increase a little disproportionately for next year because of all this.
Okay. Just one final question on the plant-based products that you have and the plant-based meat. Can you tell us what is the revenue contribution from that segment right now and where do you expect it to head?
It's actually very small right now. We're looking at about maybe around 40 lakhs or so. And we're looking at investing around 10 crores behind this brand over the span of next 4 to 5 years.
Okay, take that point. It'll be interesting to see where this goes because this has been a valuation driver for a lot of companies who are in this space. But for you, we'll obviously look forward to your capacity increasing and the contribution of revenue coming in from the domestic business itself. Thanks a lot, Chala, for joining in. Always a pleasure speaking.